Join me in this video for a comprehensive overview of the types of investment funds eligible for Portugal's Golden Visa. We'll also cover the benefits of these funds and key factors to consider when selecting the right one. In general, investment funds can be categorised in various ways based on asset type, investment sector, risk profile and more. For Portugal, the investment funds eligible for the Golden Visa can be divided into three main categories. 1. Private equity funds, 2. Venture capital funds, 3. Mutual funds. Private equity funds typically invest in companies that can demonstrate positive cash flow and have promising prospects for expansion within Portugal or in international markets. Popular sectors include healthcare, industrials, IT, renewable energy, hospitality, education and others. Some funds focus on a single sector while others diversify across multiple sectors. The typical strategy for these funds is to take control of operating a company and increase its value by participating in management. Private equity funds generally carry moderate to high risk with an expected steady return. Most private equity funds are closed-ended with a lifespan ranging from 6 to 10 years. Key features: generally lower risk compared to venture capital funds. Diverse options including debt funds, renewable energy, healthcare, hospitality, logistics, manufacturing, agriculture and more. Expected returns may be lower than venture capital funds. Venture capital funds focus on early stage startups with global potential, typically before they become profitable. As such, venture capital funds are riskier, but also come with a higher expected return on investment. The most common sectors are technology, artificial intelligence, e-commerce, life sciences, clean energy and others. These funds typically do not pay annual returns, instead they focus on increasing returns upon exit. Venture capital funds are generally characterised by high risk, offering the potential for a larger profit or losses with high expected return. These are closed-ended funds with an average lifespan of 8 to 10 years. After closing, the investment is liquidated and profits are distributed. Key features: potential for high returns greater than other types of funds. Opportunity to invest in unicorns, startups valued at over 1 billion at an early stage. Important notes: your investment is typically locked in for a longer period than other types of funds. It may be challenging to evaluate funds without expertise in the field. Unlike private equity funds, mutual funds invest in companies traded on the stock market. The main objective is to outperform the PSI 20 index, which tracks the performance of Portugal's top 20 national companies by market value. Since mutual funds primarily invest in the same companies, a PSI 20 in varying percentage, the overall return generally does not differ significantly from the index. Some mutual funds invest up to 40% in foreign stocks or bonds for diversification and potentially higher returns. Unlike private equity funds, mutual funds do not have predefined duration, making them open-ended, meaning investors can exit at any time. However, exiting the fund will result in the loss of the Golden Visa. Not all mutual funds available in Portugal are eligible for the Golden Visa, but there is a short list of funds that accept Golden Visa investors. In this part, we will cover fees associated with investment funds. Subscription setup fee. This is a one-time fee paid when investing in funds. It may be charged as a percentage of the invested capital, typically between 1% and 3%, or as a fixed amount. This fee covers fund setup costs, fundraising, marketing, administration, etc. Compliance, know your customer, KYC and more. The fees charged as an additional cost above the €500,000 investment amount are setup fees. However, in most cases they are deducted from the investment amount. Management fee. An annual fee paid by the funds to the fund's managing entity, typically calculated monthly or quarterly from the fund's resources. It's generally between 1% and 2.5%. This fee covers daily operational costs including management company salaries, regulatory compliance and other expenses. Performance fee fund returns are the most exciting aspect for both fund management advisors and investors. Performance fees are a percentage of investment returns not distributed to investors. Performance fees vary significantly depending on the strategy, asset type, and whether the fund distributes annual dividends. Performance fees often have a hurdle rate, which means a minimum rate of return the investor expects to receive. The hurdle rate is the minimum expected annual profit rate on the investment fund, and any returns above this rate are distributed between fund managers and investors based on a pre-agreed ratio, depending on the fund type and its objectives. Exit plan fees. This is a one-time fee deducted from the investment value when you exit the fund or sell your shares. This fee is typically a percentage of the investment value, often ranging from 0% to 5%, and may decrease the longer you stay invested in the fund. Exit fees do not apply to all investment funds eligible for Portugal's Golden Visa, and additional fees may apply when exiting the fund, such as capital gains taxes. If you're interested in obtaining Portugal's Golden Visa residency, simply reach out to Citizenship Bay, an authorised agent in several countries worldwide, specialising in citizenship and residency programmes through investment. With their full expertise and established connections, Citizenship Bay can handle all the steps necessary to secure your residency. For more information, contact us through our website www.citizenshipbay.com or call us on the following numbers.